Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Tyme Technologies. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations. So let's get right into it. So Tyme Technologies is a biotechnology company. The company focuses on developing cancer metabolism-based therapies for solid tumors and hematologic cancers. The company's lead clinical CMBT compound, the SM88, is an oral investigational modified tyrosine derivative that is hypothesized to interrupt the metabolic processes of cancer cells by breaking down the cell's key defenses and leading to cell death through oxidative stress and exposure to the body's natural immune system. SM88 is an orally administered cancer metabolism-based therapy that is chemically altered to be the non-functional for fundamental tumor cell processes, including protein synthesis. Now, the company has multiple cancer metabolism-based assets and other formulations for SM88 in the pipeline, including injectable, intranasal, and transdermal that are expected to be advanced into the clinical setting. And they also broke into the COVID-19 stuff today. So let's get right into the news of what's going on with them. So Tyme Technologies skyrocketed 120% today after securing new patent claims for COVID-19 infection fighting technology. And that is huge news. And we're going to get into that. But before we get into that technology, we're going to go into a little bit of the fundamentals of the company and what's done historically, which I don't think is going to have too much of an effect on this video. But let's just get right into it. So the company has a current market capitalization of $231 million. I think it went up now that it's $3.50 a share to about like $400 million just from yesterday. And due to its status as a clinical stage biotech company, Tyme Technologies didn't post any revenues in 2020. Now, it's currently unprofitable, and the analysts do not forecast it to become profitable over the next 3 years, but it's very difficult to project the future with an unknown new biotech pharmaceutical. Now, looking at its balance sheet, the short-term assets do exceed the short-term and long-term liabilities, but the company has less than 1 year of a cash runway. So if they run out of money, they will have to raise more money, possibly through a stock sale, but who knows? So let's bring it back here. So what did the analysts say about this one? Now, the analyst consensus, it's a moderate buy with a target price of $8.75 over the next 12 months. I think that's on the low end, but I'll get into that in a few minutes. I will note, though, however, that the Ford Equity Research Report has this one as a strong sell rating. And if you want to read their report, please do. But I do not think they're taking into consideration the huge future potential of the COVID-19 treatments that is currently in clinical trials right now. So my buy, hold, or sell recommendation on Tyme Technology, here are my thoughts. As I examine this company, I need to figure out the future projections to really buy into this one. If there were no promising prospects in Tyme's pocket right now, I would have been a strong sell with the Ford Equity Research Report on this company. But being an emerging biotechnology company that usually focuses on developing treatments for advanced cancers through its cancer metabolism-based therapies, I think it's made a wise business decision to refocus some of its attention to developing treatments that might help fight the COVID-19 virus. However, the company still has multiple steps to navigate before treatment will be available to the general public, though. The clinical stage biotech firm's TYME metabolic technology remains an investigational compound that is currently not approved in the US for any disease treatment at this time. Let me reiterate that. It's an investigational compound and it's not approved at this moment in time. They just got the patents for it, but it's not an approved compound to treat COVID-19. Now, it's still in preclinical testing. Tyme repeatedly prevented COVID-19 viral replication without any attributable cytotoxicity to the treated cells, according to a press release. Now, the technology works to limit cellular metabolism constraining viral replication. The company wrote in a statement that we believe that Tyme diminishes the ability of COVID-19 to hijack an infected cell. Now, Tyme intends to initiate the appropriate clinical trials to substantiate the safety and efficacy of TYME. Now, I have to repeat this. Due to its status as a clinical stage biotech company, there is no posted revenues for 2020, but the company has a strong pipeline of upcoming therapies and plenty of cash to burn for now up until the end of the year, with about $19.4 million in cash and cash equivalents at the end of the September quarter. So that being said, this is a highly risky, speculative investment, but I have to say, folks, I love it. To decide whether or not to buy into the stock, you have to ask yourself one question. How much risk do you want to take in a clinical stage biotechnology company? The rewards could be huge. I mean, when I say huge, I mean massive. But just remember that if they don't succeed in their clinical trials, the stock price could plummet. But they are not just focusing on COVID-19, but many other things as well. But I think in the near term, the COVID-19 revenue, if approved later on down the road, could be massive. I wouldn't put all the eggs into this one basket though. But if you feel like it's a gamble, this one might be the right one for you. Look out though for some short-term volatility once the news subsides, and buy into one of those future dips and hold for the long term. If the company succeeds in its clinical trials, I foresee a stock price of around $10 to $15 a share sustained over the next 12 to 18 months. But be careful and take all risk into consideration before investing into an unproven biotechnology company that's only in clinical stage trials right now. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations and general market updates. Until the next stock update later today, folks, ciao.